Hi, I'm Michael Yardney, and a lot of people are asking me at the moment, is it time to start worrying about our property markets? You see, the financial markets around the world are currently taking a beating, aren't they? And for the first time in a long time, property prices are falling in many parts of Australia. According to RP Data Riskmark's Home Value Index, their seasonally adjusted capital city median house prices in Australia dropped 0.2% in August. In fact, there's been an overall decline of about 1.2% since the market peaked, which was around May. Now, looking over the whole year though, the National House Price Index increased about 8% in the last 12 months. But currently, signs are clearly indicating that our markets are cooling as we're sort of getting towards the end of 2010. And many commentators are predicting that, at best, prices are going to remain flat for some time to come. Now, of course, there's always those people, the doomsayers, who say that home prices are going to fall significantly. So I guess back to my original question, is it time to worry about our property markets? Now, I don't think so. Look, sure, we're moving out of that first phase of the cycle into the next phase of the property cycle. But this is normal. It's normal for prices to slow after a period of high capital growth. All markets go through cycles, and after a few years of close to 20% growth in some suburbs, the markets are simply getting back to their averages. The RP data figures for the last quarter show that Hobart and Canberra were the top performing capitals in the last quarter, and median prices increased over 3 months over 1.4% and in Hobart and 1.2% in Canberra. Sydney was interestingly the only other city which experienced a price rise. It was a negligible 0.2% in the last quarter. Declines in median prices for the same period occurred in Melbourne with a fall of 1.5%, Brisbane where prices dropped 2.6%, and Perth took the biggest hit with substantial decreases of about close to 5%, 4.8% over the last 3 months. Overall, the national median house price was recorded at $410,000 in Australia, and that's down from July, which was about $415,000. So look, with all these mixed messages, with all this news, what do property investors do? I'm about to explain to you, but I want to mention to you that this property update is being brought to you with the compliments of my 2010 Real World Real Estate Workshop. It's Australia's longest running advanced property training, and it's long been regarded as Australia's leading property training. If you'd like to understand what to do in these changing markets, and especially if you want to get involved in property development or property renovations, click on the link below and find out more. Okay, what about what we should do at the moment? One of the biggest mistakes that many property investors make is they forget history. When a market turns, they forget that the same thing happened years ago, and the market once again is going to improve and start rising. But as human beings, when things are going good, we think they're always going to continue to go well forever. And when things go bad, we think things are going to be bad forever too. The truth is that all property markets, in fact all markets, are cyclical. They grow, they plateau, they move, drop a bit, they go up a bit. It's just the nature of economics. Certain factors in an economy have to catch up with each other. Now, if you're a long-term property investor, you should be excited about the opportunities our current markets present. But of course, you can't just go out and buy any property or pay any price. And that's what some investors thought they could do in the past. In this very different financial era, to be successful as a property investor, you're going to need to develop some new strategies, or maybe just going to have to adapt, tweak some of those existing ones to meet the new factors posed by our cycling market. Now, I foresee a generally flat market, flat property prices for at least the next few months, in fact possibly well into next year. But I also see some great opportunities. You see, I think we've got our economies improving. The government, the Reserve Bank says our economy is going to boom. They say we're going to have the best mineral boom, mining boom we've had for a long, long time. And that means our economy is going to grow, rents are going to go, the ability to buy a bargain from motivated vendors is also going to be there though, because as interest rates go up, people are going to pull out of the market for a while, so you can buy the type of bargain that maybe you couldn't have bought a few years ago when there was much more stronger competition from other investors and from owner-occupiers. You see, I know now as the market moves on, some investors are going to set themselves up for success at this stage of the current cycle for the next stage of the cycle. Now, my personal strategy is to continue with what I've been talking about for years and what Pam and I have been personally doing for years. Number one, you've got to buy the right property. One with an element of scarcity, which will always make it appealing to owner-occupiers. They're the ones who push up property values and also to tenants. Number two, buy in an area that has always outperformed the market. Number three, buy at the right price. Now, this has got to be below its intrinsic value. The type of price that even if values do drop 5 or 10%, I don't think they're going to, but even if they do, you're going to be covered. And then number four, only buy properties to which you can add value. See, during this time of flat growth, I believe you should be manufacturing some capital growth yourself through renovations or redevelopment. Well, what about this story about falling property values? Well, the property markets around Australia have held up pretty well, but they're obviously adjusting to a rising interest rate environment and I guess to some general market nervousness. Sure, the value of some properties have dropped, and in particular this has occurred at the upper end of the market, but they were never investment grade properties anyway. And the same is going to happen to many holiday locations over the summer months. Prices are going to fall as fewer buyers bid for those lots of properties on the market. And property values are going to fall in those lower end suburbs, in particular the new housing estates and in regional Australia. These are all areas that will be much more sensitive to rising interest rates. And prices are going to fall further in those areas. Watch out. But I see medium density, middle price properties, particularly in the inner and middle ring suburbs in Melbourne, Sydney and Brisbane, holding their values pretty well. You see, people in these areas, people who live there, they're not as interest rate sensitive, are they? Now, you know how they say statistics can lie? Well, currently the reported median price changes, they're not a really good measure of what's really happening in the market. Let me explain. While the general property market has been pretty flat, there are still some suburbs that have got very, very strong capital growth, while at the same time, many suburbs have had their median prices fall. Look, it's like me putting one hand in a bucket of ice water and another hand in a bucket of boiling water and saying, on average the temperature's fine. Some parts of our capital city markets are boiling hot and others are not. We're moving into the next phase of the property cycle, one of increased risk for many investors. And that's because they're not going to be carried by rising markets. Yet it's also one of great opportunity for those who know how to play the game. So what am I doing? As I said, I'm going to continue investing the same way that I've always done. I'm going to continue looking for opportunities. I'm going to be financially responsible. And I'm going to take advantage of a buyer's market. What does the future hold for you? Will it be one of prosperity or one of dependence? That's one of the important questions you must ask yourself. What are you doing today to protect your future? Now, if you want to grow a significant property portfolio, you need to own properties that are going to provide wealth-producing rates of return. And therefore, you should seriously consider learning how to grow your wealth the same way sophisticated investors do, and manufacture your own capital growth through property renovations and property development. Now, if you join me at my annual Real World Real Estate Workshop in October, and it's only a couple of weeks away, you can discover proven systems and strategies for profitable property investment. Gee, there are a lot of P's in there, weren't they? Proven systems and strategies for profitable property investment. I shouldn't have tried saying it a second time. And they're going to allow you to take advantage of a window of opportunity between now and when our property markets turn down eventually as interest rates go up too much. Now, just to make things clear, this is an advanced property workshop that I conduct only once a year, and it's Australia's longest running 3-day property workshop where you learn the art of property development and property renovations from some of the most respected experts in Australia. And by the way, your satisfaction is guaranteed by my personal guarantee. When you come, you're going to learn real world answers to real problems faced by investors in today's changing markets. And really, so much is happening in our property markets nowadays. I'd also like to keep you updated. I keep you updated most days with my blog. So you can click on the Michael's blog link up there, and you can subscribe to it if you like. Now, this is a different subscription to my regular newsletters. It gives you my short daily updates. I look forward to sending you your next update soon. In the meantime, have a great week. Make it a great week. This is Michael the Yardney.